morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, January 27th. That Chinese flash PMI that came out on Thursday night showed contraction, ended up market selling off in the emerging markets, which fueled our market sell-off as well. On Friday, Dow Jones down 318 points, NASDAQ down 90, S&P down 38, and the Russell down 28. S&P actually closed at its lows on Friday. So pretty significant selling, definitely a distribution day. So we have 2 days down in the equity markets, almost literally wiped out all of December's gains. So things can move rather quickly, guys, so we really got to stay on top of things here. So now I have a lot of stuff to show you. I have a lot of indicators, and I have a lot of indices and sector charts that I want to go over with you so we can get a better handle on where we think this market is headed. Now, on Friday morning, I mentioned that it's all about the yen and the emerging markets, and I'm going to go over that with you today. And in front of you, you see the FXY, which is the ETF, if you can't track the spot yen itself. As you can see, as the yen continues to move lower, U.S. equities have continued to move higher. So it's definitely an inversely correlated relationship. Now, with the yen breaking out of this bearish symmetry, chopping around a little bit, this is not a good sign for what is to come if the yen continues to move higher. So, do we have rallies in between? Absolutely. That's going to create shorting opportunity. Do we want to short rallies right now? Well, not necessarily. Today and tomorrow is really going to be a key factor, if possible, that we have a tradable top in place. And we don't know that as of yet. So we've had, really Thursday, we had a little bit of a sell-off. Wasn't that bad, but yesterday, Friday was definitely significant. Definitely woke up a lot of people. No question about it. So I'm going to be looking for a few things. The first thing is that I've been doing this for a long time. You usually see what happens with something like this. There's a lot of retail investors that are long, and there are a lot of retail investors using margin. I think it was almost about 60-something% when last time I checked in early December. And I think it was even higher now, maybe in the 70s. That's significant when somebody's using margin, and they're using margin to purchase stocks because obviously they think stocks will never go down. And then we do have this mass liquidation sale. You're going to have a ton of margin calls, which I think would be healthy, that we flush out all the weak hands coming into today and maybe even tomorrow, and then we get a pretty significant bounce. Now, that bounce is really what we have to watch for, and that's going to be volume. If the volume behind the bounce supports the fact that maybe we might be moving higher, then we would probably look to see higher prices and then maybe chop around for the next couple of months, because usually seasonal weakness really comes in the summer, right around May, June, sell in May, go away type mentality. Well, right around May, June, July, you get that seasonal weakness, market's really crappy, and then you get that Santa Claus rally, just looking further out. So this is sort of unusual, but the reason why is because we are at all-time highs. We've grinded all the way through from the end of November of 2012 to the end, obviously, of 2013. So that's significant move up. So things do change, and that's what we need to be prepared for. Now, this is a stock picker's market. I've mentioned that before. So if you're buying quality stocks on pullbacks, they should favor well than just buying outright stocks or buying indexes. And I would be staying away from the indexes at the moment because it's going to be tossed around and pulled back and forth from big hedge fund managers, money managers. Now, we do have end of the month, so we should have some inflows come in to support the market. So that's why I'm thinking that we're going to get a decent rally, but not before the markets push lower and margin calls are being met. So that's why I think now we should get I would say at least a gap down lower, or if at the opening markets open flat, I think we push lower, and then we would see where the market goes from there. Okay, so let's just keep that in mind. Now, let's take a look at, you see the FXY, and I wanted to show this to you. This is what we should be looking at, and I will be watching this as well as I'm watching the EEM, the Emerging Markets ETF. This is significant here. So I think, you get 36.5 is really going to be the next spot. So 36.5 here, and then let it chop around a little bit, and then see where where the emerging markets go, because their Turkish lira is getting slammed, the peso is getting slammed, and these are the exotic ETFs. I'm sorry, the exotic currencies that are really taking on the chin because of the emerging markets selling off. So now we have this crisis going on, right? So-called crisis in the emerging markets, which actually hits our markets, but I think that was a sell-off in sympathy because the longer-term time frame charts are actually way intact. The weekly charts look fantastic, and again, things do change. But in the longer-term picture, I still remain bullish. In the short term, obviously, is what we want to be looking at right now. But what I think could happen here is that the emerging markets sell off, money comes out of that market and then goes into our markets in the U.S. So that we haven't seen that yet, obviously, because we're selling off in sympathy with all of the other markets, even European markets. So just keep that in mind. Because we could easily turn around at any given day. So I wouldn't want you to load up a bunch of shorts at the moment. All right, let's see where the markets head first, and then if we can get a tradable bounce into resistance, that's when you start shorting rallies. Right now, the markets need to prove itself, and you don't want to be shorting in the hole here the last 2 days. That's why I like to take a step back for a couple of days when you get to see a lot of this selling, or maybe you nibble into buying some good quality longs, and then when the market does bounce, you got a nice little portfolio of stocks here that you can just kind of leg right out into that bounce and then look to get short the market. That's what I'm looking for. Okay, so we have emerging markets, as you can see, and then we have China, which is the FXI ETF, really getting clobbered as well. And again, 33.5 here is where I'm looking for that first pivotal low breaking down. We already took this out, so this is going to be the really next spot here to see where this market happens. Look at the volume increasing, so massive distribution coming out of the Far East. Okay, so now let's go run right into some of these indicators that I mentioned as well. Now, the first thing is let's take a look at where are we with the overbought, oversold. Now, the McClellan oscillator is a great indicator for swing trading. And this thing is like moving a truck, obviously. As you can see here, we're still within our neutral range. Okay, now if we start to break lower, 60, 70, 80, this is where I'm going to be looking for a bigger bounce to happen. Okay, now, in the short term, if you're day trading, if you're trading 1 or 2 days, this is what you should be looking at. Go into barchart.com. I haven't showed this to you in about a month because really nothing has happened, as you can see. We had one down day. But look what happens. When you get into this 97 percentile, you get followed up with a big bounce. Now, that doesn't mean it has to happen today, but in the next day or two, look for at least a dead cat bounce back up into this neutral territory. So below 99, above 101 is what I like to look for. So we have a break below here. So I'm watching something to say that, hey, we are indeed moving higher. So that's what I'm looking for, looking to pick up some longs. And if your palate's dry, you don't have a lot of longs there. You're getting clobbered, and that's the whole point, is staying focused. When markets do sell off, it creates a ton of buying opportunity. Now, we don't really look to pick a bottom, but again, if you migrate to stocks that are strong stocks that have just pulled back in sympathy with the markets, and then when the markets actually gain a little bit of footing, these stocks really move. So just keep that in mind. All right, so the bar chart way oversold, looking for a bounce here in the next day or so. So I think we can get a flush this morning and then sell off into the early afternoon, consolidate, and then maybe get some sort of a good rally going into the close. You might get some follow-through for an upside move for another day or two. Okay, remember, end of the month as well supports end of the month fund flows that come in, okay, to start the new month. All right, now, let's take a look at the tick. Tick really broke down. Again, now this is the second day down. Let's see if it continues. If it stays low or below zero and it really start to hover below that, then that's not a good sign for the bulls as well. Okay. Now the VIX, we have an outside day for the VIX. Let's see what happens today. Right, we had the 1 day out. This is a good buy indicator for the VIX here. Now, if we can get out of the VIX, let's see what happens if we break another 2 days out and we get another candle inside. We get a close in. That'll be a buy signal for the equity markets and a short signal for the VIX. Another good little system here. Works all the time. Well, let's say almost all the time. Remember, when you have a lot of fund managers, long-only managers, they have to protect their portfolio, and they're like a bunch of big boats just buying things, and they have to buy the VIX to protect themselves. So they just come out and they just go out and buy it just to buy until the market sell off, and then they start selling. That's why the VIX always comes in, and that's just this is 2013. So again, another day out or a day in today. If we close inside the band, that'll give us a buy signal in equities if we take out that candle's low. Okay, if we break higher again, it's even going to create a better selling opportunity for the VIX and a buying opportunity for U.S. equities. So this is what we'll be watching today, the VIX as well. Now, the CBOE, which is gives you a good measure of put call. We're still bullish here, but again, as you can see, we're starting to creep up a little bit. So complacency is starting to break down, which tells me that we're starting to get that fear factor coming in. That's why I always said buy protection. It's cheap. While the put call ratio is low, you want to be buying some puts. If you're looking to ride the wave of a sell-off, then you should be buying protection. Protection is made to be lost, right? It's an insurance policy, but at least it gives you a little peace of mind going into the trading day, going into that trading week where the markets are soft. So definitely look to do something like that. Now, since we're speaking of that, right, let's take a look at gold and oil. Well, gold, we have that inverted headed shoulders that we identified, making higher highs and higher lows. We broke bearish symmetry. We did break this neckline. Now, gold, which is kind of shocking, gold actually only up 470 on a market itself like that. It's just so weird the way things are acting right now. But remember, everything doesn't have to be the same as it was the last time. So 470 on gold. To me, I would suspect that gold will be up about $20. But we did get a 20-day rally previous day, so maybe a little bit of support, maybe a little bit to get an outside day. That's a good thing, but maybe a little bit of a consolidation up at these areas before gold explodes one more time. Now, same thing with silver, right? Silver did the same. Silver actually, I thought I had a chart here, but I don't. Silver actually really actually sold off, and we closed basically flat up a couple of pennies. So that's not really a good thing either. But the reason why is palladium actually sold off on Friday. So very, very weird price action from the precious metals. So if palladium sells off, then gold and silver are really not going to go too far. This is your silent leader. This is definitely something you're going to watch if you're looking to trade or have a position in. I do think that gold and silver does explode higher between now and February, and that's really, they have that intermediate strength seasonality, and then from there it starts to kind of taper off, and then gold picks up strength into late spring, late summer, early fall. So I do see a little bit of strength in here, especially when you have a little bit of uncertainty in the markets. I do think that should play it to the upside, at least for the short term. Okay. Now let's just take a look at one more. I wanted to show you new highs, new lows. As you can see, we're starting to break down here. Obviously, it does look that way. Bullish percent SPX. What a great short signal that we had. I showed this to you guys. I said, look, we're starting to separate from the 8. Once you start to separate, that tells you that we have something bigger, deeper downside. And sure enough, it did tell us. Now, where are we? We're at the 70%. Do we have a little bit more room? I like to see us get down here, 69, 70, 71. We could even get there today even. S&P holding up well in the pre-market. Let's get right into that. As you can see, now, I wanted to show you, here's the monthly chart. If we close, we might have an outside month reversal here. And this is pretty significant because we haven't had that in quite some time, actually up until late 2012, as you can see in May. So this is significant, and I want to see where this thing closes, if it does close. And we got a full week, but to me, it looks like it's on track of closing outside from the previous month, which should usher in some more selling. Now, we could have a 1 month reversal, obviously, and then revert right back. So not telling you much, but this is not definitely a game changer. It would be a game changer if this were to break down below. Okay, now we only have one candle, so we need 2 to confirm this. So we still have a full month to go. Now, if you look at the daily chart, as you can see here, we had some of these trend line. Now, the 50 is curling lower. Obviously, the 200 is starting to curl lower. The 8 and 20 has crossed. And now we've taken out pretty much all of December, which leaves us to right here, come in this right around this low. I got a 1751 area here. If we take this area out, 1769, 1770, call it, you'll have that flush back to this 1272 extension from the low. So then that's going to be your other target. And we would still be in an uptrend. Remember that, okay? So far, the charts are still holding up well on the weekly charts. Here's the hourly. This is what I was looking for, that 1820 break low. Sure enough, we got it. And look what happened. We went right to the 38.2% Fibonacci retracement, almost to the penny. Here's my other target, 1776. We just held that above just about 4 or 5 handles. A break below 1776 is going to fuel some more downside pressure, and that's going to put us right around the 1750-ish area. So a break below 1776 will get us back down to this area here. You might want to write that down or just make note of this support area. Now, if we do rally, right? Let's see where our targets would be. If we rally back into the 1797, 1800, and then fail, that's going to be a great shorting opportunity. And then from there, if we rally and fail and we have weak volume, that's going to open up the doors to start selling rallies. Okay, and until then, you really want to be neutral to market right now. Okay, I wouldn't want to be looking for, again, unless you're shopping for quality longs, that's another story. But if you're just looking to trade for the day, let's see what happens this morning. Markets did try to sell off a little bit here, as you can see on the hourly chart. We actually sold off while I was shooting a video, and now we've recouped back up to about 4.5 handles here. Okay, markets are still iffy, and remember that liquidation, when you have margin calls, we could easily lose that $4 handle in a matter of just on the opening alone. All right, so this is what I want to show you. S&P weekly chart. We have this beautiful uptrend line, and we have actually this bullish symmetry. Look at this. This is about 19-20 days. This is about 19-20 days. This is about 26. I'm sorry, 20. This is weeks. I apologize. 19-20 weeks. 19-20 weeks. And here's about 26 weeks, and here's about 26 weeks, okay? So if this were to happen, we've had about 6 weeks down. Maybe we're looking for, in between we had a couple of pops, but maybe we look for some weakness next 3 to 4 weeks or so. Don't have to be exact, but if you can see, look at what happened. This is pretty significant, as you can see. And then we've sold off for about 4 or 5 weeks, 4 or 5 weeks down, 4 or 5 weeks down. You can see the pattern, right? 5 weeks, 5 or 6 weeks, 5 weeks, 4 weeks. Maybe we sell off down to this area here, which would take us to about the 1750 area in the S&P cash. Okay, so just keep that in mind. We're looking. We have the bullish symmetry, and now we're breaking. Right. So if we're breaking, we might be looking for maybe 4 or 5 weeks down here, because this is what it's showing us from the previous history. So just keep that in mind. But again, very constructive on the weekly chart. Okay, Spiders Daily. We did break below the 20, broke below the 50, and now we're sitting across this horizontal trend line support at 178.88. Now, I think that if we do break that area, look for this upper trend line, this lower trend line back from the November 2012 lows. Keep that in mind. If this area holds, then it's going to be this area, and then, of course, the 200-day moving average. Now, as you can see, the 50 is still holding up. Now, if we can get back above the 50 in the next day or two, then you still have an opportunity of actually challenging the highs. So that's why it's a little iffy yet to call that there's a top in place. Remember, topping is a process. Okay. Now the diamonds obviously took it on the chin. It is the worst index that we follow, and now this really needs a lot of work. I wouldn't be looking to pick a bottom here, but look what happened here back in October. Right. We sold off. Nobody wanted to touch diamonds. Sure enough, hit the 200, put in a doji, and rallied since October, literally to new highs. So if that's the case, if we lose this area here, 156.25, 157, then you're going to hit that 200-day. And let's see if that market rallies back above the 200-day. But that looks like where the diamonds are headed, which is the Dow Jones ETF. Transportation sector, pretty amazing stuff. Weird price action, guys. That's what I'm thinking. That's what I'm saying, is that when things aren't really moving in sync, it's just very odd to see that transports makes new highs on Thursday where everything else sells off and then just dumps on Friday. Okay, held the 50, lost the 20, lost the 8. This is going to need to hold. Now, if the transports start to really have mass liquidation, then everything else is going to be, all bets are off to the upside. This will take every other index back down. This is our leader. Okay. IWM, same thing, guys. As you can see, these two are tracking really well together. Lost the 20, above the 50. If this starts to lose steam, I would be looking for a break below 50. Will be this lower trend line from the November 2012 lows. And the Qs held up fairly well as well. Apple reports today, so this is going to have some effect. Definitely check the earnings calendar of what you guys are holding so you don't come into a surprise. And then now the GLD, take a look at this. As you can see, we are above this area here. Okay, now we just kind of cleared this horizontal support, resistance, excuse me, now support. So a break above here and consolidates, I think you could be looking at easy 128 underneath that 200-day moving average. Here's the XLE. As you can see, they had this big bearish rising wedge, finally broke down. I still like this sector. I would stay away from looking at a bottom at the moment, but I do like the sector, the oil and services sector, Schlumberger, Halliburton, BHI. They all reported, they all beat. This sector could be a good buy on the dip type mentality here if you're looking to kind of build a longer term swing trade position. Those three I do like a lot. Here's USO. I'm watching USO now again. I like to see, let me just show you this here. This is the bullish percent. And I like to see this bullish percent come down to this 35-40% area. Then from there, if we can get one more sell-off in the USO and make a lower high from this low, then that's going to be a good buy-in area, okay? But we want to see this flush a little bit more. If we can get down to this area, this is the area I'm looking at, then we could get into another long trade in the USO. Okay, so again, a higher low from this low, very easy to manage if that time does happen. Now, the home builders obviously definitely took it on the chin. Risk off, you're going to have home builders, solars, oil, almost just about everything take off to the downside. Now, this is something I'm going to be watching for buy-in opportunities, okay? I do think that the banks and the builders will provide some good buy-in opportunities in 2014. You just got to obviously time it and pick yourself out. I wouldn't be looking to just buy it today, especially with a massive candle low like this. But just keep in mind for the home builders, I do like it. But look at Lennar. Lennar held in very, very well. Okay, another good opportunity. Something like that, if Lennar's holding in well, that's something you want to look for when we have a risk-on rally. PHM did okay. I mean, I wouldn't like to see this, but it is one of my favorite. It held above the 50 and the 200. I'd like to see it hold this area. If it does break lower, then I'm just going to push this off to the side and just kind of stalk this and wait we get some sort of a bounce here. All right, KBH did very well, held up nice, above the 20, still above the 20, above the 50, and above the 200. So this is actually something I'm looking for some sort of a break higher. But to me, I like to see 1850 get taken out first before we move higher. And look, we have a thin zone on the volume profile, so this thing really has legs to move higher. Okay, XLF, the banks really took it on the chin, and obviously you're going to have that people liquidate their bank position, but I do like the banks. This is going to create a good buying opportunity as well. I would stay away from it now. If you're not long it, I would stay away from it now and wait for an opportunity to come in. Here's Citibank, literally just took it on the chin here. This to me is a big surprise. From making new highs, broke down, now at the 200-day moving average. Let's see if we get some sort of a base, something like this here, and then a rally, base, and then a rally. So this is what I'm looking for again in Citibank. Okay, and then of course, excuse me. Let's take a look at J.P. Morgan. Again, J.P. Morgan now getting interesting to see where we go. Now remember, we could easily correct 8 to 10% here, and that's something that right now isn't telling us so. But if this market really starts to roll over again, we could easily correct, which would take us below the 200-day moving average in JP Morgan and then back into this area here. But this is what I'll be watching again, looking for higher prices in the banks. This is going to create a good opportunity for the banks. Here's Goldman, same thing with Goldman, obviously, and then Apple. Apple reports today. Let's see what happens with Apple. Just chopping around here at the upper end of the range. So again, I think it's holding up. Obviously, Carl Icahn tweeting out his positions, getting more frequent than ever, and just kind of puzzles me. Why would he do something like that? If he's looking to build a position in Apple, I'm sure he's looking for lower prices to leg into a bigger trade. So that's kind of odd to me. And then lastly, obviously, is the Qs. All right, guys, that's pretty much it. Have a great day. Be very, very careful out there. And again, if the volatility is not it, cash is a position. Remember that. Have a great day, everybody. Take care.